Is the Florida housing market crashing like all these crazy YouTubers are saying? Well, at the moment, the answer is no, but there are a couple of things that are concerning as a real estate agent for over 20 years. So if you're somebody that's looking to buy, sell, invest, maybe even buy a second home in Florida, or perhaps you already own a home in Florida, then you probably want to pay attention to this video because I'm going to outline 3 different things that are a concern at the moment that could potentially lead to a bigger problem down the road. Now, will these things actually lead to a housing crash? I don't think so, but they're definitely a cause for concern. And that's exactly what I want to talk about in today's video. But before we do that, I'd like to take a minute and ask a favor. If you find any value in my content at all here on YouTube, do me a favor and hit that thumbs up. And if you want to stay updated on everything real estate related nationwide, do me a favor and subscribe to the channel. As you've probably heard me say on many different occasions, real estate is local. And because of that, at the moment, we're seeing different real estate markets depending on where you're looking in the country. I'm located here in Southern California, where inventory is still really low, especially when compared to historic trends. And because of that, we're still seeing a very competitive housing market, especially when homes are priced correctly. That's because we still have a level playing field out there when it comes to buyer demand in the market. So even though buyer demand is lower than normal, inventory is also a little bit lower than normal. So the two have more or less been moving in lockstep together, which has basically created stability here in the housing market. But that's exactly opposite of what we're starting to see in Florida, as inventory levels have now gotten back to 2019 levels in areas like Jacksonville and Tampa, in addition to some of those cities around the Gulf Coast into Louisiana and parts of Texas. And if you know anything about real estate, supply and demand is what actually drives markets. And that's exactly why we've seen the craziness in Florida over the last couple of years, because we had way more buyer demand than you had available supply, which essentially pushed prices up. But now we're starting to see inventory grow in a more meaningful way, and unfortunately, it's not being met with buyer demand. So you got more and more homes coming onto the market as interest rates have gone up, while housing affordability has hit some of the worst levels that we've ever seen on record. So as a real estate agent, when I start looking at the Florida housing market, the first thing I like to do is look at supply. Where is supply? You cannot have a housing crash unless you have more supply than you have demand willing to buy those homes. As long as you have more demand than you have inventory, house prices are not going to crash. But we're starting to see inventory grow a little bit, and the question is why? Well, part of it I just mentioned a moment ago. We have rising interest rates. The cost to buy a home is much more expensive than it has been over the last couple of years because home prices have gone up, interest rates have gone up, and on top of that, you're starting to see costs rise considerably when it comes to insurance, which is really the second concern that you should be considering if you're looking to buy in Florida at the moment. Now, the first one I mentioned a moment ago was inventory, so make sure you're watching inventory. If new listings grow in a meaningful way, that's a cause for concern. But on top of that concern, you need to look at what it actually costs to buy a home. If I were a buyer right now looking to purchase in Florida, the very first thing I would be doing after getting a pre-approval is talking to an insurance agent, finding out how much insurance is actually going to cost you when you purchase a home. Now you might be saying, Jeb, of course that's something you should do. You need to know your costs. Well, here's what I would tell you as a real estate agent for nearly 20 years in this business. Insurance is one of the last things people actually look up when it comes to buying a home. They go and get pre-approved, they go out and find a home, they go under contract, and then their mortgage professional says, hey, we need a copy of your insurance. And that's when the borrower typically starts to go out and shop for insurance. And historically speaking, traditionally speaking, it hasn't been an issue because insurance costs haven't been absolutely crazy like they are at the moment. So if you're a buyer out there at the moment, make sure you're getting quotes for insurance before you go under contract in a home. That way you know exactly what you're going to be paying on top of your mortgage payment, on top of your property taxes, because that's one reason I believe inventory is growing in a meaningful way. Buyer demand has backed off because interest rates are high, but insurance is also very high. And on top of it being high, and in some areas, it's just difficult to get, almost impossible to get, depending on what you're trying to buy. And another risk you have on top of rising insurance costs is the fact that Florida is prone to natural disasters. And this time of year, is when we start getting hurricane season. And a lot of these insurance carriers have already jacked premiums in addition to being reluctant to renew insurance policies because of the time of the year. Because this is typically when they're going to see storms. This is when they're going to see the most damage coming out of Florida. And as you are well aware, insurance companies are in the business of making money. They don't like losing money. And when you have a big natural disaster, these insurance companies can get absolutely hammered. And one of the reasons the insurance premiums have been rising so much over the last couple of years, because like here in California, there's been limits on how much these insurance companies could actually increase premiums. Therefore, these insurance companies were breaking even losing money some years because they weren't able to adjust their premiums high enough to actually cover their losses. Well, one of the big changes that happened this year in California is the state said, we'll allow you to raise premiums up to X amount. And guess what? Insurance companies raised them the most that they possibly could. But even then, some insurance companies said, you know what? We're not even dealing with this. We're leaving the state of California because of all the limits, all the restrictions that the state actually put on how much they could actually increase premiums. So here in California, if they were able to increase more, they would have increased more. And that's one of the things that's happening in Florida is there's not really a limit on the increases because of everything that's been happening. So going back to what I said at the beginning of this video, is this going to cause the housing market to crash in Florida? And as I said at the beginning, no, I don't believe it's going to cause a crash, but it's definitely a cause for concern, especially when you start to see inventory build. If inventory builds in a meaningful way, insurance costs go up and they stay high. This creates two hurdles for buyer demand, and you need buyer demand to meet with inventory in order for home prices to stabilize. So if you don't have buyer demand and you have inventory increasing, this means these people over here, the sellers, need to reduce their prices in a meaningful way in some cases in order to sell their homes. And on top of that, you have condos being a huge concern for Florida, especially those condos that are over 30 years old. As you can see from this chart here, there are way more listings that are 30 years old or older on the market than there are homes that are less than 30 years old. And the main reason for that is because there were recent regulations in the state of Florida that required condos that were over 30 years old to basically go through an inspection to make sure the building codes met today's standard. Because back 30 years ago, the codes were a lot different. And a lot of these buildings have deferred maintenance. And that deferred maintenance is what caused that building collapse in Miami just a couple of years ago. And that's exactly what the state of Florida is trying to prevent. And because of that, they're requiring all these buildings that need upgrading to meet current code. They want their funds, they want to be fully funded. The HOA needs to be fully funded in order to pay for those costs to upgrade that building to current standards by January. And what you're starting to see is these HOAs are issuing assessments to each owner of the building, which more or less means the owner of that unit has to come up with that amount of money in order to satisfy their assessment. And because some of these buildings are requiring special assessments as high as $30 million, it can mean each unit is getting assessed more than $100,000. In fact, there's an article that I read in the Wall Street Journal about a Bayfront condo complex called the Cricket Club in Miami, where each unit was assessed $134,000 in order to bring that building up to code. Well, guess what? Not a lot of these owners are sitting on $134,000 in cash. In fact, some of them don't even have the equity to be able to refinance and pull that cash out if they could. And even if they could, guess what? Lenders aren't allowing you to borrow money on buildings that need this much work. So you're kind of in this pickle, if you will, where the building is asking for money, you don't have the money. So instead what's happening is these owners are starting to sell their units. In fact, this particular owner originally listed his home for $350,000 and finally ended up selling it for $110,000, which is actually 42% less than he actually purchased the home. So when I look at this from a bird's eye view, if you start having a lot of condo complexes that need this much work and start assessing the owners of those units large amounts of money and don't allow them to pay it over time, because these HOAs have to be fully funded. They need all of the money by January. And what I mentioned a moment ago, most of these people aren't sitting on that much cash, especially those that have bought in the last couple of years. Which means if more and more of these buildings start doing that sort of thing and owners have to start liquidating these units, guess what? That creates a lot of supply on the market and it isn't likely to be met with a lot of buyer demand, because the only people that can buy units in buildings like this are investors, those paying cash, because you're not able to get loans on buildings that need to do this type of renovation. Now with that, not all of Florida is diluted with all of these high-rise condo buildings, right? A lot of them have been developed in the last 30 years, so they're not going to be affected. But the ones that have been around, if you live in an area that has a lot of high-rise condos, South Florida is really, really concentrated with these types of buildings because, you know, they're on the water, because there's a lack of land to build in that area. You have a lot of them. So if you're a buyer out there and you're buying in a condo building, whether it's 30 years old or not, you need to pay attention to the financials of that building. How much money do they have in reserves? How much money do they have sitting on the sidelines? Because some of these buildings had very little money in reserves, because my understanding is the state of Florida didn't require them to have a certain amount in their HOA reserves for this sort of thing. So now they're having to assess each owner. So if you're a buyer out there, whether you're buying 30 years old or not, you absolutely have to pay attention to this, because the last thing you want to have happen is you buy a unit and all is good, and you get assessed some large fee that you can't pay, and you end up having to sell your property, and in some cases less money than you bought it for. So going back to our question as we started the video, is this all going to cause a crash in the housing market? I would love to know, what are your thoughts? Do you believe rising inventory, rising insurance, all these HOA issues are actually going to cause a crash? Do me a favor and let me know below. But my answer still stays the same. No, I don't believe this is going to cause a crash in the housing market, but I do believe rising inventory, rising insurance costs, HOA issues are probably going to put a little bit of pressure on house prices in areas where this is highly concentrated. You're going to see more and more sellers having to reduce prices in order to get their home sold. Now, is this going to cause some huge cascading effect that's going to drive prices down in a considerable way? I don't think so. It doesn't look like that at the moment, but it's definitely something you need to pay attention to. Now, I always talk about controlling the controllables. Control what you can control in the market. You can't control rising insurance. You can't control HOA litigation. You can't control inventory in your market. But you can control your credit score, you can control your down payment, you can control putting yourself in the best position possible so that when the right opportunity presents itself, you're in the right position to move forward. So if you're somebody that's looking to buy a home, you're not ready at the moment, or you're unsure what's going to happen with the Florida housing market, and you just want to put yourself in the best position possible, do me a favor and start with this video here.